Yes, China is facing significant economic challenges as foreign investors withdraw record amounts of FDI, with $14.8 billion pulled out between April and June 2024. This trend that raises concerns about the country's economic stability as more investors continue to lose confidence in the Chinese market. This certainly is a big shocker for China as far as pulling out of the FDI is concerned. And remember, this is to the tune of $14.8 billion, that too, in the period of April to June 2024. Priyanka will join us shortly to take us through the details of what has led to this particular development and how is it that China even plans to recover, because this has been an economic slowdown for China. $15 billion that have turned its back on China, and that is the kind of investment that has been pulled out. How will it affect the Chinese economy by and large, and if there is a concrete plan to actually cover up on this? What is the perception that has led to investors losing confidence in the Chinese market? Priyanka, to take us through the details of it. Yes, those are the details on your screens. Remember, this is $14.8 billion that we are talking about. This is the kind of investment that has been withdrawn in a mere 2 months in China. And Priyanka, I'm being told, joins us with the details. Please do take us through what has caused, I beg your pardon, this loss of confidence in the Chinese market, and whether the Chinese government has a concrete plan to actually reinstill confidence, recover from it.
Yes, that's right. So China's foreign investments have sort of withdrawn about nearly $15 billion, like you rightly pointed out, and that's between only April and June this year. And a report that was released by the Chinese country state agency, which is the State Administration of Foreign Exchange, stated that meanwhile Chinese firms which invested a record $71 billion, which meant that the investments went out of the country, while investments within the country were withdrawn. And that is an increase of over 80% of that, while the reasons that we can attribute to is the economic slowdown, the rising geopolitical tensions, and also foreign investors are looking at other destinations as the China Plus One strategy has sort of gained momentum across the world. What that essentially means is that companies and businesses across the world are also looking at diversifying their businesses so as to not depend solely on China as their investment destination. And countries that sort of stand to benefit from the China Plus One strategy include India, but also Thailand, Malaysia, and Bangladesh, if the economic and political turmoil wasn't underway, were also some countries that stand to benefit from this development. And why is that so? Because they're definitely looked at manufacturing hubs that offer not only infrastructural opportunities, but also cheap labor, which are looked at favorably by investors for economic purposes. And also, what does that mean for the OPEC, which that is the Organization for Petroleum Exporting Countries, is that the reduced economic slowdown in China reflects in demand of oil also going down, which means the OPEC will also has trimmed its projections for the oil demand, not only for China, but that will also have impact globally.